Hello, everyone. I'm Jean.
Hello, I am Tiffany.
We are going to introduce Sunshine AI Signal to you.
Sunshine Signals was created by Sunshine, who has over 20 years of securities and trading experience, including founding a firm that provided trading software and a trading platform. Sunshine Signals is a tool that can help traders plan trades with higher probability of success. No system, including Sunshine Signals, can provide an exact low or high of the day or provide the exact movement of the market, but it does provide resistances and supports, as well as a pivot point that can help traders when they plan their entries and exits. This system does not guarantee that a person using it will be successful. To be consistently successful, one must be able to manage position size properly and have a plan, as well as a stop loss and a plan when the trade goes according when the trade goes according to expectations, as well as when the trade goes against expectations.
On the left screen, you will find a comprehensive signal that provides guidance and analysis before the opening of the US 500 cash market. The short-term signal is an immediate indicator, reflecting the current market sentiment and direction. On the other hand, the main signal encompasses a broader time frame, extending over 1 or more days to capture the overall market trend. Additionally, there is a weekly signal that offers an intermediate trend direction, giving traders a broader perspective. It's important to note that in highly volatile markets, the signal's direction can experience multiple shifts within a single day. This dynamic nature of the market requires traders to stay vigilant and adapt their strategies accordingly. The main and the short-term signal provide vital insights into potential buy, range, or sell scenarios. These signals can be combined in various ways to enhance trading strategy and decision-making. When interpreting the main and short-term signals, it is crucial to consider the current daily signal alongside the prior day signal and weekly signal to gain a comprehensive understanding of the market landscape. When the signal undergoes an upgrade or downgrade, it often indicates a significant shift in bullish or bearish momentum. In cases where the momentum is exceptionally strong, multiple upgrades or downgrades are likely to follow, presenting traders with valuable opportunities to capture market movements. In addition to providing directional guidance, the signal also presents support, resistance, and pivot point levels. These levels are specific to the US 500 futures and not the SPX, allowing traders to tailor their analysis more accurately. The pivot point, in particular, holds a critical threshold that can influence trading decisions. If the price breaks the pivot point from below, it favors long trade, especially when the pivot point coincides with a single resistance level. Conversely, if the price breaks the pivot point from the above, it favors short trades, particularly when the pivot point aligns with a single support level. These levels act as triggers for further movement. Lastly, the signal provides valuable insights into the market's unilateral directions. This indicates the potential for a trend day, where a significant and a sustained movement in one direction is anticipated. Identifying trend days can be advantageous for traders, allowing them to align their strategies with the prevailing market momentum and potentially maximize their profits.
EOD stands for end of the day. This sequence will not appear every day. Sometimes a week or even more will go by without this sequence appearing. When the EOD sequence does appear, the market tends to move in the direction of the sequence. But finding an entry point requires practice and patience and proper risk management. For example, if a long at EOD sequence appears in the morning and the market falls intraday, then we will often look for a bounce, particularly within the last 90 minutes of trading. However, if the long at EOD sequence appears in the morning and the market rises intraday, then we will typically look for dips to go long. But just as importantly, we would avoid shorting in those instances. The EOD sequence can kick in immediately or during the overnight session or next day. If there is a strong trend, it may even take 2 to 3 days to kick in, which is why position sizing and risk management is key. If a long at EOD sequence appears, the market can bounce immediately, or it can fall another 50 or more points before bouncing. However, with proper position sizing and stop loss, along with planning trades around key support levels, this will increase the probability of a winning trade. And this sequence tend to have a high degree of accuracy. The reference chart will be provided pre-market on most days. The reference chart should be regarded as a possible trend rather than the exact movement of the day. For example, this reference chart suggests that a low of the day could happen in the middle of the trading session. So when planning trades on the short side, it may be advisable to exit at least a portion of the position if the market does fall, and as well as exiting short positions along the way and set stop losses on the rest rather than holding the position until the end of the day. Again, the reference chart is not to be taken as exact movement of the day. In fact, actual movement could differ dramatically from the reference chart. This is simply another tool that can be used in conjunction with other tools for planning trades. This is an introduction to Sunshine Signals, and we hope that you enjoyed this explanation of the signal. For more information, you can refer to other videos that will provide examples of the signal during real trading sessions.